Welcome back to Soul of Crypto. Today we're talking about something that most crypto investors are not paying attention to yet, and that is how XDC could potentially take market share from Ethereum in the race for real-world asset tokenization. Now, at first, that might sound unrealistic. Ethereum is the largest smart contract platform in the world. It has the biggest ecosystem, thousands of developers, and billions of dollars already locked into DeFi. But when you look specifically at the real-world asset sector, the competition becomes a lot more interesting. Because the race for RWAs is not just about popularity. It's about which blockchain institutions will actually use. Let's start with the size of the opportunity. Real-world assets include things like bonds, trade, finance, invoices, commodities, real estate, private credit. These are assets that already exist in traditional finance, and they represent trillions of dollars in value. Some analysts estimate that by 2030, the tokenized RWA market could reach $10 to $16 trillion. That means whoever provides the infrastructure for tokenizing these assets could capture a massive portion of the next wave of blockchain adoption. Now here's where XDC enters the picture. Unlike many crypto projects that started with DeFi or NFTs, XDC was designed from the beginning to focus on trade finance and enterprise adoption. The XDC network uses a delegated proof-of-stake system that allows transactions to settle in about 2 seconds with extremely low fees. And that matters because when institutions move billions of dollars in assets, they care about efficiency, speed, and cost. Ethereum is powerful, but during times of heavy activity, transaction costs can rise significantly. For institutional infrastructure, that becomes a serious consideration. Another advantage XDC brings to the table is its hybrid blockchain architecture. Most banks and financial institutions are not comfortable putting every transaction on a fully public blockchain. They often require a system where private data can remain confidential while still allowing public settlement and verification when necessary. XDC's hybrid structure allows businesses to combine private network environments with public blockchain settlement. That kind of architecture can be attractive to large institutions that need both transparency and privacy. There's also the trade finance market, which is a massive global industry worth around $8 to $10 trillion annually. Yet much of this system still relies on paper documentation, manual verification, and slow settlement processes. The XDC ecosystem has been positioning itself to digitize these processes and bring trade finance onto blockchain infrastructure. Platforms within the ecosystem have focused on tokenizing things like invoices, supply chain financing, trade receivables, commodity transactions. If even a small portion of this market moves on-chain, it could create enormous demand for networks built specifically for this purpose. Another factor to consider is institutional interoperability. Large financial institutions rarely rely on a single blockchain. Instead, they look for networks that can integrate with multiple systems and enterprise technologies. XDC has explored integrations with enterprise blockchain environments and financial infrastructure platforms, which could allow it to interact with existing banking networks. This kind of interoperability could make it easier for institutions to adopt blockchain without completely replacing their current systems. Now, to be clear, this does not mean Ethereum disappears. Ethereum still dominates the DeFi ecosystem and has one of the strongest developer communities in the industry. But the blockchain economy is likely to become specialized. Different networks could dominate different sectors. Ethereum may continue leading DeFi and decentralized applications, but networks like XDC could potentially carve out a major role in trade finance and real-world asset settlement. And if the RWA sector grows into the multi-trillion-dollar market many analysts expect, even a small percentage of that market could transform the value and utility of the networks involved. The bottom line is this: the next phase of crypto adoption may not be driven by hype cycles. It may be driven by the tokenization of real-world financial infrastructure. And that's why XDC is a project many investors are starting to watch more closely. If you found this breakdown helpful and want more deep dives into XDC, institutional crypto, and the future of tokenized finance, make sure you subscribe to Soul of Crypto, and I'll see you in the next video.